What's driving markets? Welcome to Market Take. Each week we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Nicholas Fawcett, Senior Economist at the BlackRock Investment Institute. This week, I'll share a tale of two overweights in the US and Japan. Inflation is in the spotlight again, thanks to some recent data surprises and the US Federal Reserve and Bank of Japan both holding meetings this week. Markets see a positive near-term macro backdrop in the US and Japan. We're watching for risks for both ahead, but for different reasons. US inflation has eased over the past few years, thanks to rapidly falling goods prices. Recent data has been noisy, and it's difficult to tell whether surprises are just one-offs or hint to more persistent pressures over the horizon. We're in a new volatile regime full of inflation surprises. Inflation will likely fall further towards 2% this year in our view, but persistent services inflation will likely pull it back up in 2025 as the drag from falling goods prices fades. We see US inflation settling closer to 3% than 2% over the medium term as a result. Markets are for now comfortable that US inflation will cool enough to allow the Fed to make 3 quarter-point rate cuts this year. We think upbeat market sentiment can persist as inflation cools and rate cuts come through. And that's one reason we went overweight US stocks overall this year, with the recovery of corporate earnings beyond just the tech sector supporting risk appetite. The Bank of Japan, meanwhile, is focused on keeping inflation sustainably at 2% after decades of low or no inflation. It needs to gauge how it can do that while winding down its loose monetary policy and avoid threatening recent progress in bringing inflation up. We expect the BOJ to end its emergency policy of negative rates, but to remain cautious and not start tightening policy too aggressively. We think wage inflation will drive overall inflation as the impact from recent higher import prices peters out. Early results from the annual union wage negotiations indicate that wage pressures are set to jump this year. And this week, we're watching how the BOJ reacts to that. Here's our market take. We're overweight US and Japan stocks, yet resurgent inflation in the US could spoil sentiment, so we stay nimble. Japan's outlook remains positive to us, as we don't think the BOJ will raise rates aggressively and given ongoing corporate reforms. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com